The Social Security System, or SSS, is a state-run social insurance program in the Philippines to the workers in the private, professional and informal sectors. While the Government Service Insurance System, or GSIS, is a separate state pension fund which covers those who are working for government institutions and public sectors. The basic purpose of both these agencies is to provide protection to its members and beneficiaries by allowing people access to economic or social support from government. As of end 2019, total employed persons in the Philippines was at 42.429 million, out of which 3.870 million workers are in government or public sectors covered by GSIS, while 12.885 million workers employed are SSS members. On top of the employed members, total SSS paying members was 17.426 million. This includes self-employed, 1.143 million, voluntary, 2.724 million, and overseas Filipino workers, 673,000. Total employed persons in the private sector has been greatly reduced since the COVID-19 pandemic. 2020 first half report published by SSS shows its paying members decreasing 21% compared to 2019 year-end. In order for SSS and GSIS to be able to fulfill its purpose, both agencies would naturally need source of funds. The main source of revenue is through contribution collection from its members. Members are required to contribute a percentage of their monthly salary to the agencies based on the respective contribution schedules. The employer is also required to shoulder a portion of the employee's monthly contribution. The contributions collected are then invested into fixed income, mutual funds, equities and real estate in the Philippines and abroad to obtain better yields to enhance, sustain and grow its funds. Both agencies have a dedicated department who is primarily responsible for the overall management of investment funds, ensuring liquidity, safety within acceptable risk level, and attainment of reasonable income from investments, in accordance with provisions of the Social Security law. This investment division also conducts strategic asset allocation and monitors portfolio risk, sets investments performance targets, and evaluates and recommends investment proposals relating to equities, corporate notes/bonds, government securities and bank deposits. Based on 2019 annual reports, SSS invested 16% or 92.746 billion of its investment reserved fund, IRF, into equities. Meanwhile, GSIS invested about 20 to 25% of its investment fund into equities. Traditionally, equity investments in blue-chip common stocks are a major investment class for both pension funds. Their stock selection tends to focus on dividends combined with growth. However, the search for high returns seems to have pushed them into riskier mid to small cap growth stocks recently. Even more surprising is the fact that both agencies also invested in recent IPOs, which are typically priced at higher valuations than normal, translating into more expensive stock price relative to its true value, creating a vulnerable position to their portfolio. This to me seems to indicate that they are more pursuing into an active rather than passive investing of pension funds. The COVID-19 pandemic induced a sharp decline in the stock market worldwide during March this year. PSEI suffered a 40% fall since the start of the year till March 19. This triggered the President's chief economic manager to order SSS and GSIS to buy more stocks in the Philippines and abroad. He told both agencies to take advantage of the low stock prices and also in turn to support the local stock market. It was basically a good time for the pension funds to rebalance their portfolios and help to boost the battered local stock market by pumping funds into stocks. In the following weeks, it was reported in local business news media that both pension fund agencies bought a combined total of 385 million pesos worth of stocks in the Philippine Stock Exchange in a single day. The buying spree from both agencies should have continued on to many more weeks, helping prop up a local market. So which stocks in the Philippine Stock Exchange did SSS and GSIS bought? By going through the public ownership reports submitted by listed companies to the exchange at the end of June 2020, I managed to tabulate and figure this out. Captured in this list are the stocks which SSS bought to increase its holdings of at least 10% under the stock. Notably, the agency purchased Atlas Property Ventures, which was listed in the exchange via IPO on June. It also recently added BDO into its portfolio and significantly increased its holdings of SM Investments, San Miguel Corporation and Ayala Land. SSS divested all of its Petron Corporation holdings and sold more than half of its shares under Freitas. Possibly both stocks were sold at a loss. Interestingly, GSIS also purchased Atlas Property Ventures, a recent IPO, and added Axelum Resources into its stock holdings. It also smartly purchased blue-chip companies at a discounted price. Similar to SSS, GSIS divested all of its Petron Corporation holdings. Again, possibly it was sold at a loss. Both agencies regularly track and provide their performance scorecard to the public and government as a transparency report. This report helps to monitor and ensure they are delivering the returns, providing quality service and commitment to fulfill their mandate. One of the items in the report is the measurement of generating return on investment on investable funds. Investment returns are checked on a quarterly basis and measured against the previous 3 years' performance as a baseline guide. The purpose of the check is also to see if the current performance is on track with the target set at the beginning of the year. Based on second quarter financial report, SSS total equity holdings value is worth 80.3 billion pesos and had annualized return on investment of -2.30%. It's a big improvement from -10.25% at first quarter. GSIS equity stock holdings changed in fair value was at a loss of 42 billion pesos of its fair value through profit or loss. I hope both SSS and GSIS will be actively reviewing, rebalancing and taking steps to minimize the impact of adverse market movements to stabilize and bring back pension holders' savings and put them in a position for long-term growth. This concludes the video. If you have any questions or suggestions, please do let me know in the comments section below. And if you haven't subscribed, please hit the subscribe button and leave a like to support this channel. Thank you for watching.